Now, I was recently talking to a dividend investor that was asking me which ETFs offer high quality international exposure, but do it very similar to that of SCHD. So I quickly responded with, of course, SCHY, the Schwab International Dividend Equity ETF, but realized that not that many investors really know about this ETF or, of course, exactly what it has to offer. So in this video, we're going to dig deep into SCHY, and I'm going to share with you guys why this could be a potential amazing buying opportunity while this ETF is still relatively cheap, in my opinion. So if you, just like me, are a huge fan of SCHD, but want some potential international exposure, make sure to stick around, drop a like down below, and let's get right into this one. Real quick, for those that haven't already, make sure to go to the first link in my description and grab my new dividend investing ebook, where I share exactly how I went from $0 invested to now earning over $6,000 on a monthly basis and over $1 million invested in the market. Along with the ebook, you're also going to receive my custom dividend tracker, where you can track your dividend progress on an ongoing basis and reach your dividend investing goals. So make sure to grab yourself a copy of my dividend investing ebook and the new dividend tracker today. It's the first link in my description. Now, just to go over the basics, the Schwab International Dividend Equity ETF is, of course, ticker symbol SCHY, and this ETF has a net expense ratio of 0.14%. Now, this ETF's objective says it's to track as closely as possible before fees and expenses the total return of an index composed of high dividend yielding stocks issued by companies outside the US. Now, why right now is this something worth looking into? Well, for one, if you're interested in high yielding stocks, which I definitely am, and also if you think that there's some good companies outside the US that could potentially even be undervalued as of right now and have massive upside, which I also personally think, then again, this ETF could be a good option to look into. Now, it says under highlights a straightforward low-cost fund offering potential tax efficiency. Also, it says the fund can serve as part of the core or complement in a diversified portfolio. Tracks an index focused on the quality and sustainability of dividends by screening non-US companies based on 4 dividend quality attributes. And lastly, invest in non-US high dividend yielding stocks with a record of paying dividends for at least 10 consecutive years, financial strength, and screen for lower volatility. So if you like low volatility, if you like high yield, and if you like safe dividends, relatively speaking, again, stocks outside the US also, this again is going to be an amazing ETF to look into. Now, I think it's also important to note that there's around 134 different companies within this ETF, so you are getting a nice diversified exposure to tons of different non-US dividend paying companies. Some of these names are going to be familiar, but I'm going to be honest with you guys, I haven't heard of a lot of these also. So number one, the top holding as of right now is ticker symbol ROG, then we have ULVR, we have BATS, we have ENEL, we have WES, GSK, we have 9433, DG, TTE, and lastly, we have 4528. Now, like I said, a lot of us probably haven't heard and or dug into a lot of these different companies. And honestly, that's one of the main important selling points of a high quality ETF like this one, is simply because if you believe in Schwab and you have the trust in Schwab's sort of screenings and setup for this ETF, I'm not saying this is a good idea whatsoever, but I think some investors probably honestly go into this sort of blind and just trust that Schwab is going to give you some high quality exposure because, again, the way this ETF works. Now, as far as SCHY, the Schwab International Dividend Equity ETF's performance over multiple timeframes, on the year-to-date timeframe, this ETF is up around 6.34%. On the last year, it's up around 9.78%. So it has had a decent last several months. Honestly, compared to the last few years, it's doing pretty well right now. Now, I say this because in the max time frame, since all the way back to April of 2021, this ETF is only up around 5.52%. Now, keep in mind before you freak out and say, oh my gosh, that's absolutely horrible, this ETF does pay a pretty high yield, so the total return is obviously going to be much higher, but still, up until as of recently, this ETF really hasn't caught on, and which is also why I think there could be a potential buying opportunity if you believe that this international market and the stocks within this fund are high quality enough, and if you think they have some upside. Now, I did mention that this ETF pays a pretty hefty dividend, so again, for some investors more than others, this is going to be a very, very important metric. But to give you an idea, the trailing 12-month dividend yield is 5.64%. So again, this is much higher than you're going to receive by buying into SCHD, of course. But with that, like we saw as far as price return goes, you might be potentially lacking some upside performance because, of course, you're buying into names that trade mostly sideways or even down, but offer a higher yield. Now, the dividends historically, keep in mind, again, this ETF has only been trading for a little while, but on a quarterly basis, it's paid out anywhere from 35 cents down to 16 cents, up to 69 cents, then down to 29 cents, 59 cents before that, 24 cents before that, 38 cents before that, then the first ever dividend, which is 5 cents. So the dividend payouts are sort of all over the place, and I'm not exactly sure which cadence they're trying to reach right here, but it does seem like there is a little bit of dividend growth over time. I mean, hopefully there's never going to be another 5-cent dividend because that's just sort of outright horrible. So I mean, even if worst case scenario, this ETF trades mostly sideways or even up, say 3 or 4% as far as price return goes, if it consistently pays a growing dividend yield of around 5, 6, or maybe even 7% in the future, this still could offer some potential exposure to the international market while paying you a nice pretty penny while doing so. Now lastly, just to paint a picture, since inception, 3.39 years in, which is how long SCHY has been trading now. If an investor would have invested $10,000 and reinvested those dividends along the way into SCHY, they would have started off with $10,000 and ended with $11,777, or had a total return of around 17.79%, or an average annual total return of around 5%. Now with dividends not being reinvested, we're talking around 4.45% and around 15.87% total return. So again, not necessarily great, not necessarily horrible, but like I said, most importantly, if you are someone that believes in the international market and if you think it's currently undervalued, I mean, there's a ton of analysts right now that think the international market is going to explode in the next several years. I personally, as of right now, don't have too much international exposure just because I think in the US, there's so many good companies, there's so many good ETFs that basically cover so many good companies. But honestly, if you want international exposure for a relatively cheap price, I think SCHY could be an ETF to look into. And if nothing else, maybe just keep on your watch list and keep in the back of your brain. But it's pretty obvious that investors could have made a lot more money if they would have just invested that same exact amount of money into something like SCHD over SCHY, because over that same time frame, SCHD, for example, returned an extra 8% more or less as far as total return goes, which makes it sort of a hard argument on whether you want to spend your dollars into something like SCHY versus SCHD. And once again, I would only say it'd probably be worthwhile if you truly think the international exposure is going to be worthwhile over the next several years. So now that we went over SCHY, I explained exactly what this ETF is, how it works, the stocks that make up this fund, and I even share with you guys some of the total returns, performance, etc. I lastly, most importantly, want to hear from you guys down below. Now that we're all on the same page on SCHY, is this an ETF that you personally would buy for your portfolio? Or more so like me, would you probably rather just take your hard-earned dollars and buy some more SCHD, etc.? Let me know down below in the comments. If you enjoyed this video, make sure to please drop a like on it and subscribe for more future content like this. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.